Hello and a very warm welcome. I am Ruchi Sharma. The recent surge in the virtual digital assets market has sipped into peripheral activity as well. NFT market witnessed a jump in prices, but there are growing concerns over its continuation. Many participants want to know whether this upswing will continue unabated or whether the road will be full of hurdles ahead. To answer such questions and many more and provide clarity on this, we have a very special guest with us, Mr. Dhrupad Das, co-founder Colors of India, advisor Web3 Assam. Welcome to 3.TV, Mr. Das.
Thank you for having me.
So there is a surge in the overall cryptocurrency market. Two major cryptocurrencies like Bitcoin and Ether are trading higher. This trend has also reflected upon the NFT market. What is the current NFT market situation and what is the outlook?
Well, no, I've been in this space since 2016, and since that period, I've seen many of these, crypto cycles come and go.
Right.
Colloquially, we call them a crypto winter and a crypto summer. And traditionally, I've seen that winters outlast summers by quite a magnitude. Your winter can be 2 years, your summer can be 4 months.
Yeah.
So that's usually how I see these cycles move. And every time the cycle moves, every time we head into a summer, we see that the entire market kind of gets pushed upwards, right? And that is usually because of speculation. It is also because people are taking profits from the coins or the crypto that digital assets that they've been holding for such a long time.
Right.
So that is the main reason that in every cycle we see the shift, and this is no different. But to your question that what is the outlook, I would say that there is now chances of a decoupling of the NFT marketplace and the NFT industry. Okay. Right, so the marketplace is something that we can see on CoinMarketCap or any other NFT marketplaces. Right. The details are all there for us to see. But when we look at the industry, it is less visible to the naked eye because that is what's happening in the back end, and that is the collection of your investors, your creators, developers, founders. It's an entire ecosystem and the government and the community. The main part is the community.
Right.
So that ecosystem, I believe, has grown a lot. So the outlook, I would say, is bullish. Long-term bullish. Short-term, I will not be so foolish as to make a guess.
Okay. So creator royalties have been a major issue in the NFT market. Big NFT projects and creators are opposing it. In response to this, Yuga Labs in partnership with Magic Eden is coming up with an Ethereum-based NFT marketplace that will not compromise on royalties at all. How will this royalty war shape up in future? What will be its consequences?
Royalty is kind of the holy grail at this point of NFTs, because when most of the artists got into NFTs, and I say that because as a co-founder of Colors of India, we do represent and we act for, and we are a community of artists, one of the largest in the country, fortunately, of Web3 artists specifically.
Okay.
And one big draw and one big use case that we spoke about and we were very excited about was royalties. And when large platforms started denying artists these royalties, it definitely created a chasm within the entire ecosystem and the community as a whole. And I would say that the solution to this, the resolution of the war, is going to come from understanding the distinction between the protocol layer and the application layer. Okay. OpenSea, Magic Eden, Yuga Labs, these are all application layer, whereas Ethereum is the protocol layer. Right. And what we are seeing now is that Ethereum is building into its protocol, which is the 721 protocol and the 1155 protocol, ERC. So these protocols are now being updated with a suite of functionalities. One such ERC is the ERC 2981. That is bringing in the royalty standards. And the royalty standards are expected to solve a lot of problems and hopefully not have a war at all and have peacetime and stability. That's what we really want, because that's what the ecosystem requires and deserves, right? So now if you see the EIP that became the ERC for 2981, you'll see that the Ethereum founders, the Ethereum proposers are talking about certain problems that it will solve. So it is expected to solve the problem of compatibility of royalty standards across marketplaces.
Okay.
Right? So standardization of royalties, very important point, because otherwise OpenSea has one standard, Yuga Labs has one standard.
Right.
And if you are on OpenSea, then you're stuck on OpenSea. Does that not defeat the purpose of decentralization? Ultimately, you should be able to move from platform to platform without having to worry, that your royalties are going to be denied to you. And such protocol changes, amendments to the protocol by Ethereum and other layer 1 blockchains as well, I believe, are following suit, that's going to be the way that this issue gets resolved once and for all. So at the end of the day, the community will be king and the marketplaces will have to follow suit, or if they don't provide a functionality, that will be to their loss.
Okay.
So that, I think, in a nutshell, is what I see in the royalty wars going forward. I mean, it has to be seen yet, but that is my 2 bits on it.
So, like we also spoke about OpenSea, the biggest NFT marketplace, has lost business since it's made royalty optional, that we just spoke about. There is news that OpenSea is cutting down staff by 50% and it is also planning to launch OpenSea 2.0. How do you see this? Is OpenSea doing all this to gain the lost market share and to maximize sales and profits?
100%. OpenSea is a centralized business. It's not a charitable organization. So I have no doubt that it is doing this to gain lost market share, gain reputation, gain community. I think those are 2 main parts.
Actually,
and once you gain, the reputation and the community, then sales and profits rise along with it. So, that's definitely one part of the story. The second part is that now, OpenSea took a huge hit when the crypto winter came in. Because when the crypto winter came, NFT winters followed, right? And that is a story as old as crypto. That when the winter comes, a lot of the players kind of get, outplayed by the market as a whole. So there's a shedding. But fortunately for us now, OpenSea has managed to hold it together. And let's not forget that they were one of the first players. They have played a pivotal role in keeping this ecosystem, alive. And when there was no one else, there was OpenSea. So there is a lot of goodwill that they do still enjoy. And in the course of a business, the ups and downs will happen. And I think OpenSea 2.0 is a bit to reinvent themselves. It's also an apology. And I have no doubt that these new amendments to the protocol layer that I'm talking about will play a role in how OpenSea designs its second iteration.
Okay, that's interesting. So what are the future events that you are looking at that can impact the market situation?
Well, if I am an investor, if I'm investing in the NFT market or for any market for that matter, I will always look at the fundamentals. And in a field like NFTs and virtual digital assets and cryptocurrencies, and since we're talking about NFTs, I'll stick to that. The fundamentals can be put in 2 buckets. One is what is happening on the regulatory side, because regulations play a huge part in how the market moves. Exactly. One tax here and one, amendment there can completely destroy or make a market. And at the end of the day, marketplaces do exist within the largest subset of a country and its laws. So that's the regulatory part of it. And I do look at positive regulatory changes coming in the future, and hopefully on a global scale that allows this ecosystem to grow and flourish as a whole. The second bucket, the second fundamental that I look at is innovation. Innovation is the key, right? Because innovation unlocks the users, it unlocks the community, and most importantly, it unlocks the use cases. So, and I am bullish on the innovation as I've been talking about it, that the NFTs are now, making a protocol shift from being static to being dynamic. So that is a shift that I see at a much more base and at a protocol layer, and that is an event that I'm looking forward to. And these shifts have now been announced, but they still have to be brought on chain. The nodes have to accept it. So that bit is still there, but it's, I think, now a matter of time. And once it comes on board, I will expect a lot of builders to come on and start innovating. So then I will try to observe how the fresh set of innovations gets married to the fresh set of regulations that will come. And from there, I see certain use cases emerging. And just to kind of tie it up, the main use cases that I see right now, top of mind for me, and this is by no means an exhaustive list, but these are the ones that I am personally involved with or I have some experience with. I see gaming. NFT gaming is a huge thing. I think it's only going to get bigger and bigger. Number 2, I think community building, what I call blockchain-enabled communities, BECs. This is, I think, a huge part of the new NFT game. And I suppose that I believe that NFTs will slowly become a back-end technology, not a front-end technology. Just the way that today nobody says that I'm going to HTTPS to, hold this meeting. You say I'm going on to Zoom or I'm going to Google. So it's a similar system, I suppose, will come into play, because NFTs is ultimately the protocol. It will get pushed down and the use cases will rise. So BEC, blockchain-enabled communities, that's a big use case. Third, I see in art, culture, heritage. And the largest, I believe, is a little counterintuitive, but it is real-world assets. So when NFTs start entering the real-world asset market, then I think you will see a lot of impact on the market situation, because today the real world assets are not really at play today. But once it comes and once it starts interacting with digital assets, then you will have an amalgamation of use cases. You will have a what I can call as a, it's a Cambrian explosion of use cases, I believe, will take place. And that's the event I'm really looking forward.
Of course.
And yeah, and just to conclude, just one thing I wanted to kind of put out there, that there are certain things that we should look out for in the development space, right, in the innovation space, because at the protocol level, I'm just going to rattle these off. You are going to have something called account abstraction. As I spoke of, as I mentioned earlier, the royalty standards. You're going to have context-dependent NFTs. You're going to have an NFT protocol, NFT trading amendments, or protocol NFT trading protocols will come into play. Then shareable NFTs, which will be a big factor in controlling deep fakes and fake information and IP regulation. Then you are going to see nestled NFTs, parent-child NFTs. So there's an entire suite of NFTs that are really coming into play here. So I think that's really what we need to watch out for. And as these events unfold, I think the marketplace will react appropriately.
Okay, so the future looks bright, but during the NFT market meltdown, a lot of NFT platforms announced shutdown. GameStop will shut down this month. Last year, we saw WazirX, Tessera, Form Function closing down. With the NFT market showing signs of recovery now, can we expect a surge in NFT startups?
100%. I think when I spoke of tech, the tech cycles, how it works, at least this is my observation of it, and there is a lady called Carlota Perez also who has written the book on it. But how it actually works is that you have these speculative booms. Right? In these speculative booms, the funding takes place. Every person who has an idea manages to get the idea funded. And by the time the funding rounds are complete, the boom usually is over and we go into winter. So winter is where all the building takes place. So, and that's also where the regulators kind of get alerted by the boom. And then during the winter, they have the time and the space to actually regulate and come up with concepts and, explore all the options available to them. So, since now we are coming out of a winter, I would expect that all the NFT startups from the last cycle will now be ready for market at this point. So that's what will drive the new surge. And I believe that is what is driving the new surge, right? So, and once this new surge happens, I expect a new set of NFT platforms and NFT creators and NFT startups to get funded, to start coming into the market, to have new ideas, because with every innovation that takes place to the NFT protocol layer, which I spoke of earlier. So I would imagine that new sets of use cases get unlocked, and then new startups to deal with those use cases and innovate on these use cases will also emerge. So it's a virtuous cycle. So I think it's a virtuous cycle. And how I can characterize this in one line is that the industry is what is leading the market. So during the summer, it's the market that has got the highlight. But during the winter, it is the industry that's the highlight. And industry works in the background. It works quietly, but it's what's setting the base for higher and higher highs for the market to reach. Not saying, and that's a speculative statement, and I should caution everyone that don't speculate in the markets in that manner. But these are the fundamentals at play, that the industry is stronger and the community is stronger than it was maybe 3 years back.
Of course, of course. So what are actually the challenges in NFT adoption in coming years, and how to combat them?
Challenges are aplenty. I think the fact that the NFT dream in some sense has not been met is testament to the fact that there are many challenges. And the way forward is obviously recognizing these challenges and then kind of dealing with them. So, thank you for that question. So first is onboarding processes. Right? It is very difficult to get my grandmother and my mother to open a wallet, save the passkey, and just, have that entire take all those steps required to interact with the Web3 ecosystem. So the onboarding process is the biggest challenge. And the answer to that, I've already mentioned, is actually account abstraction. Where an individual will now not need to hold an NFT. The individual will just own a smart contract. And the smart contract will take the headache of owning the NFTs or the crypto or whatever beneath it, right? And then it'll be as simple as a username, password that we're so used to today, like on a Google or a Facebook, like any Web2 platform. So you'll have the functionality or the ease of access of a Web2 platform, but all the magic of a Web3 platform. So that, I think, is how the solution will come. Second is that at some level, I think Web3 blockchain is still a solution looking for a problem. So we are still short on real world solutions to real world problems. I am not saying that it has not happened. We have made huge progress, But I think there is still a case to be made that the Web3 dream has not percolated to tier 2, tier 3, and places where it can do the most good. So I think those use cases still have to be built out, and they are being built out, I believe. So once that gets met, I think the adoption problem will also get resolved, and use cases will most importantly be solved by government regulation as well. So, I mean, I should point out that the Indian government has been fairly proactive, and the Telecom Regulatory Authority of India has in fact put out a consultation paper where they have asked exactly these these questions, to which, Colors of India and Panda Law, where I'm also a partner. So we are trying to answer the consultancy paper for TRAI. So in this, we have done a lot of research to understand what kind of solutions can be provided, and regulation is the main solution. And we'll touch upon some different types of regulations that may be required. So that's number 2. Number 3, I would say there's a prejudice. It's not a secret. There's definitely a prejudice in the market. When you say I'm in the NFT industry or I deal with crypto, people always look at you as funny way, especially in public settings, right? Because they don't know what to make of it, and they have this old notion. So I suppose that has to change, and that is just a factor of time and just good news coming out.
Right.
Then the fourth problem I see is that digital assets as an asset class is difficult to regulate. So the regulators are also suffering and are also kind of trying to play catch up, because by the time they figure out X, the X has already changed into Y. So it's very shape shifting all the time. So it's a challenge. They're trying to cope with the challenge. And as you can see, all of these problems are kind of interrelated. You start solving for one, you start solving others at the same time.
Right.
And the fifth problem I find is that there is still a lot of lack of knowledge and information and know-how on how to regulate the entire intellectual property side of things. So I believe that NFTs, and especially the entire Web3 ecosystem, is very well primed to leverage intellectual property rights, more specifically monetize them. The way that we can monetize intellectual property rights in the Web3 ecosystem is completely different from what existed in Web2, where there was little to no monetization, at least not for the distributed crowds. It was there for the large entities, the centralized entities, but the public really had no means to monetize except for advertisements and stuff like that. So that, I think, is a area that we should very actively combat, because once the IP Lego piece falls into place, many other use cases will emerge, and I even see things like communities and and public bodies, NGOs. I see many organizations that are very public facing and charitable being able to leverage Web3 technologies for their own benefit.
So like you mentioned, regulations, what kind of regulations are needed in the NFT market? What kind of standard regulations do you think will be passed as well as followed by countries globally?
So I'll answer that in 2 parts.
Okay.
So first I'll talk about what I think will happen globally, which I call, you can think of it as meta regulations. These are the meta principles that will be applied by all countries, and they have in a sense agreed to it under the G20 charter. They have also, there's consensus with regard to these meta regulations even under FATF, which is the Financial Action Task Force. And most governments are kind of in addendum with this, which is 3 things. Number 1, they do not want a competitor to the native currency.
Okay. Yeah.
So Indian rupee is a native currency, the dollar is a native currency, the pound is a native currency. No government wants a challenge to that.
Right.
Everybody remembers, at least those who remember the history remembers, that destroying a nation's currency is a way of attacking it. It is a form of warfare. So when projects come out saying that we are going to take down the rupee or take down the US dollar and use our little token, it is a call of war.
Right.
So that is why you'll find that the RBI has got so many issues with the way that cryptocurrencies have been propagated. And most importantly, I think there is a misuse of the word currency, because currency is a technical word under the central bank regulations and laws. And currency is something that only the sovereign government can issue. No other individual is allowed to issue a currency. So when we say cryptocurrency, the RBI hears the word currency, and that really bothers them. So that's 1, don't compete with the native currency. Number 2 is don't scam, don't defraud. Consumer protection is key, right? Every government, including India, is constitutionally required to ensure that its public interest is maintained and that people are not being swindled or robbed or falling victim to crimes. And that is agnostic of the technology that is used to perpetuate those crimes. Right? So in that sense, crypto is just the latest kid on the block. When there was internet, people used the internet. When there was Web 2, they used Web 2. Now it's Web 3's turn. So I don't think it's anything new there, but the government definitely has intention to make sure that people are not creating schemes and, coming up with projects that unduly impact, the uninformed or the poor or anybody that can suffer.
Right.
Or may not have the knowledge to deal with this, right? Because there's so much and this is why even the advertising rules have been changed, right? To ensure that products like cryptocurrencies and, digital assets are not advertised unduly. Right. There has to be certain self-regulation from the industry itself on how it advertises. And the third thing is financial crimes, money laundering, terror financing, sanction evasion, right? These are crimes, tax evasion. So these are crimes that are, again, nothing to do with crypto, but crypto helps the commission of these crimes to a great degree. And when you start talking about, trying to break a currency or evade a currency like the rupee, then these things come into play. Right. And that is why you will find that the Money Laundering Act has been amended by the Indian government to bring in virtual digital assets as a they've specifically included virtual digital assets. Right. And it is for this reason. So, and I would say that these three risks, frauds, financial crimes, and competition to the native currency, are the biggest risks that the industry faces. And these are the regulations that we should see coming. This is going to be the negative list. Right. All governments agree that these three things should not be done. Right? So now we can come to what should be done. And this is where I think the government policies will diverge. Every government, every country will try to bring in a separate set of regulations to enable. So those are the disabling, these are the enabling provisions. Right. I would see something like special economic zones coming up. There is talk of something called Web3 by the Sea, as planned by the Goa government along with, I think, the India Blockchain Alliance. So that's a very interesting plan. It still has to take shape and we have to see it happen on the ground. But if that is really something that is on the cards, then I think it's going to be very interesting to watch that space. But if not that, you have the gift cities, you have other SEZs. So that is definitely going to be a area of interface where projects can set up, and the government may encourage all the high-risk projects to be, kind of sandboxed over there. Right. The second part, as I said, are regulatory sandboxes. These are things that can operate within universities, within different campuses. It can operate within the ministries itself, where they try to understand what are the different ins and outs of a technology. So that is also a very positive way. It helps industry lead the way, but at the same time, it lets regulators understand the risks all at the same time. So they don't have to play catch up. Third, I would hope to see some financial incentives. Currently, the tax regime stands as such that we are financially disincentivized to actually interact with cryptocurrencies and virtual digital assets. But if we come into a regime where they are incentivized, then that should be a very positive thing. Fourth, I would say, is hardware manufacturing stack. I think a lot of hardware goes into making this entire Web3 ecosystem a whole. And if India is self-dependent and, Atmanirbhar with the hardware stack, then that should be a huge plus. And that leads me to the next point, which is, we also have this digital public infrastructure that is being built out. UPI, Aadhaar, DigiYatra, DigiLocker, CoWIN, all these are part of this larger subset. You have, I think, a lot of the real estate is also now coming onto online platforms. So I believe that digital public infrastructure as a whole will also get a Web3 upgrade. So that will be a huge step forward in how regulations come about and adoption takes place. And then on the education side, I would say that you need to have micro skill development programs. Again, the infrastructure already is there, the laws are already there, regulations are already there. So this is a way for people to keep upgrading their skills, and for those who want to switch to Web3 businesses or Web3 and skill up for Web3, they should have that opportunity. And this is not just for Web3, I would say this is for all emerging technologies, micro skill development programs. So I think that's one thing to be looked at, and state governments can play a role in that. And my last point would be a study of mental and physical health impacts. That's key, right? Because these things do have an impact that is taking place, which can be negative. And we have to really be careful of the complete impact, because, I can breathlessly keep talking about how positive it is, but this is the negative that is personal, may not be in the public front. There's not enough studies about it. So this is something that has to be, also studied and calibrated carefully.
Sure. Thank you so much for giving us your valuable time and having this conversation with us. Thank you so much.
You're welcome.
That's all in the special segment for now. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.2 TV, and for more information and stories, log on to our website www.3versetv.io or scan the QR code.